I like DeFi because it's composable, and I'd rather invest in that than in like stablecoin orchestration, even though it's super valuable to the world. And I'm much more excited about like what new business model doesn't exist today, that's going to be worth billions in 5 years.
This episode is brought to you by Blockdaemon. You'll hear more about them later in today's episode. The Digital Asset Summit, our premier institutional conference, is right around the corner. In London from the 13th to the 15th, we'll be at the Old Billingsgate with some of the largest banks, funds, and allocators as they explore how to gain exposure to crypto. We'll have a ton of great speakers, including Dan Moorhead, Joe Lubin, Guy Young, and a bunch of amazing side events so you can meet some of the largest names in the industry. So follow the link in the show notes to find out more and use code EMPIRE200 for £200 off your ticket. Nothing said on Empire is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the companies, funds, or projects discussed. All right, everybody. We have replaced Rob with the far more handsome, more experienced, better investor. I'm just kidding, Rob. We love you. But we've got Mike Dudas from Six Man Ventures joining the show. We got Santi back on. What's happening, Mike?
Hey, I appreciate it. Excited to be here, guys.
Yeah, of course. Maybe we can start. Dudas, you're on a historic run. Actually, you got brought up at a dinner I was at the other day saying, they said Dudas is on a historic run. Six Man's killing it. So you got Plasma, you got Pump Fun. How are we feeling these days?
Yeah, so we're feeling good. So what's really exciting is the things that we're investing in now feel like truly like long-term sustainable products that I think in 5 years mainstream folks will be using. They're going to start using them now and are using them now, but I think we can grow, and we're moving away at sort of the app layer. So in 2017, 18, we had this like ICO phase where the things that were offered were like these grand, layer one tokens and things like Dentacoin and just ideas. They were just pure financialism, right? The next cycle was like extremely speculative in terms of what assets were being offered. We had kind of like NFTs, and we had basically everything just focused around trading, speculation, but it was kind of like wrapped in these big terms and ideas like Web3, but the underlying products just never existed, and everything was sort of funded and bought and speculated on before anything existed. What is exciting about this cycle is that you finally have products that are actually generating revenue, and then frankly using that revenue to benefit token holders economically. Right. And so that is like the default, like the top apps, like Hyperliquid, like Pump. They're different things. One is perps and one is sort of like meme coins and creator economy and attention economy. But there's real revenue, real attention, and economics driving the performance of the token. So we finally have like tokens that do something.
Mike, I guess a question. Look, full disclosure, I'm an investor in your fund. So for people that weren't aware of it, but like if you were to go back and see the initial pitch deck of what Six Man Ventures was going to do and invest in, would that check out to what you guys have been doing? Or is it more of, look, you've just had phenomenal success in picking the right projects and you've morphed the thesis because the times change and you see that opportunity?
Yeah, so it's funny because now I'm saying it like it was obvious and everything in the last second. But I actually think like in our deck for the last fund, which we raised in 2022, was like something about Web3. What we really meant though was crypto application layer. So I actually think our website, which we haven't updated in like 18 or 24 months, still says like Web3 on it. I mean, it's embarrassing actually if you brought it up. It's like purple and it has a CryptoPunk on it. I don't know. It's kind of cool. And it's like our personality, but ultimately what it boils down to is we weren't entirely certain what applications would exist in crypto, just as kind of like when the mobile phone finally like took off and hit critical mass, it was sort of unclear how the app store would be used and what apps would would burgeon and explode, but it was just
Mhm.
clear that this is what people were using. It went from like 100% desktop to like 40% desktop usage in just a few
Yep.
years. Everybody had a phone and an internet connection. You got Uber, Airbnb, and all these other amazing things. Amazon became just even more magical. That is now starting to happen in crypto as these L1s and L2s become
Yeah.
performant. So we knew we were going to invest in the app layer. That
Yeah.
was right. The apps we started investing in
Yes, you know what?
2022.
Yeah.
Yeah, it was the
Well,
worst year of this fund or of our 4 years of investing as a
yeah.
firm, though,
Yeah.
because basically we were thinking of the apps as those kind of like speculative NFT projects and things like that.
Yeah.
Unfortunately, after the reset post FTX, you saw kind of from the bottom, the really, really like mission driven people wanted to create real products, stick
Yeah.
around. And those are the folks who built the cool stuff we're seeing now.
If I were to characterize the success that you've had is because you actually use this stuff. I mean, you do link style, which, you were very involved in the NFT
Mhm.
stuff, and it just pays to be close to the metal and understanding what's going on. Like I think you were the one of the creators or very involved in the core team of Bonk, which was, essential for the resurgence of the Solana community post FTX. And so I think look, I totally get it. Like you have to be sufficiently general in crypto to pay attention where the puck is going because we're so early with this technology, like circa, early first smartphone, iPhone moment. And you're like, the internet's not that great yet, but there's cool apps being built. And so, yeah,
That's
maybe.
exactly right. So I tend to know that if it's something I'm using, if it gets to the level where like I get excited about it, my instincts like over 7, 8 years have been pretty good about what crypto applications people are going to use. So like, to your point, I'm actually stunned by the way, how many investors like literally don't have money on chain. And I have it, all over the place, right? On Solana, on L2s, Hyperliquid, and figuring it out and just start investing actually in punk strategy. Again, none of
Yeah,
this is
saw that.
financial advice, but I'm experimenting and it's just having a lot of fun again, which is partially,
Yeah.
we decided
Uh,
to chat today because I'm so bullish that we're not
yeah.
near the top. And it's because I'm
Mm,
finding new and interesting things to do on chain right now and loving it across a
yeah.
bunch of different areas.
Before we go there, I want to get your thoughts on something because, look, being too early is indistinguishable from being wrong. Now, you've been very right this cycle. And you and I made investments like Steppen, for instance, is an example that I want to go to because as much as Pump is working extremely well right now, and look, it's had its ups and downs, but it's executing, Hyperliquid executing, some other consumer projects executing. But like the evolution of Steppen was I was running the New York Marathon one year and everyone had like you could see it in the expo, like Steppen, because the rewards were super high. And then of course the supply sinks were not there. And so the project in its own right, I think has been successful. It's just how do we how do we transition this conversation into how do we to what degree of conviction do you have that it's not going to do that same evolution where everything in crypto has just been tied to the market cycle and prices and like how do we break that self-referential dynamic or are we going to see a huge drawdown of these tokens and then we're going to say the technology sucks again.
Yeah, good question. So, look, actually, somebody tweeted yesterday about like narratives in crypto move so fast, and be careful. Make sure you get in and out of in and out of things really quickly. And like, yeah, that's like true for the majority of things in crypto. But like, there's a little Jeff Bezos quote, like, "Hey, what's going to be the same in 10 years? Like, those are the areas where I want to invest." And basically we look for things now because I was investor in Step and I love it. I love it. I was investor in Steppen along with you, and when we invested, the idea seemed like something that would be durable. And actually, I think you're also an investor in Moonwalk Fitness, which I think has a much more sustainable model. We're investors in
Yes, sir.
Sleepagachi, which is
Yep.
basically again health and wellness related and tracks and gamifies it. So anyway, we're looking for folks who are building into areas and segments that we think will still exist in 5, 7, 10 years, and they want to stick around. So to get back to Pump, basically the token meme coin launchpad was basically the wedge to a much broader long term vision, which is look, we all kind of agree that more and more things are going to get tokenized over time. You're seeing it with everything from real world assets and to crypto assets, to stocks, you name it, right? I worked at Paxos for almost a year, and we believe equities, commodities, you name it's going to get tokenized. Well, the folks at Pump, and they're super native of this generation, right? They're in their very early 20s, believe that there's this notion of that the creator economy and the attention and that like fandom and interacting with personalities is going to be represented through a token and through value. And so the reason I think Pump has a chance, and a pretty good chance, to be sustainable is that, again, they just didn't view it as like, hey, it's a token launch pad and it's always going to be meme coins. These guys have now innovated to streaming, and I believe will continue to move into bigger and bigger areas of attention in terms of basically tokenizing that attention and allowing people to participate. And its current form, by the way, it's extremely limited, right? Somebody streams, I can buy the token and the creator eats on the fees and volatility. Like if it just stays like that, I don't think that's super sustainable, but you can be confident it's not. You'll get things like token gated conversations. You're going to get things like advertisers coming in. My guess would be in airdropping products or things to folks who hold the token or watch the streams, and you just kind of go from there, and it gets bigger and broader. So I think it is the first sort of sustainable big social product in crypto. But honestly, I'm not like I'm an investor. I'm not the founder for a reason. Like I don't have the very clear vision of what the next big innovative product and unlock will be on Pump or on most of our portfolio companies. I'm just confident that these folks who we talked to, have been talking with a lot of people about how many of these nascent projects are doing DATs. Well, the Pump guys are getting begged by people, dozens of groups, to do a DAT, and they're like, no, like we're not in here to make a 1 to 2 billion short term in the public equity markets. Like we want to be here in 10 or 20 years, building out a generational social media attention company, and we're in the very, very early stages of that, year and a half in.
So look, we've all heard the bull case for crypto as it relates to consumer, which is everything's an attention game. If you peel it back, tokens can serve as better mechanisms to align contributors with the platform and in a more equitable way. So like if you're a creator, why would you go on Twitch and live stream when you can go on Pump and earn a more reasonable share of what your contribution is to these networks? Hasn't happened. We've had some flare-ups. I would say Pump is far along, and I think it has a team to execute. But it begs the question for someone out there hearing this saying, these things have worked before. Like, why would you reinvent the wheel? Like YouTube has distribution and all these platforms have distribution. It's so hard to displace social networks and change habits. Like, do you think the price actually can work in, to the detriment of these platforms where creators just get super disillusioned with the price of their token? Because the reality is very few tokens actually break away.
Yeah, so it's a great question, and I don't think that sort of call it the motion or the sort of playbook for sustainable creator token value appreciation has been cracked yet. And I think that's partially because the nature of the trader on Pump today is still very, very short-term oriented. It's primarily sharps, and we haven't crossed the Rubicon to kind of like true fans feeling comfortable with tokens. In the bull case where this works, the reason it's better than YouTube is because I, as the fan, or I, as the person who's excited about that personality, or it could be many personalities, it could be a brand, can participate in the upside. I can't do that on TikTok or YouTube. I can't really speculate on it. But again, the sort of normal market participant and medium fan isn't there yet. What you're seeing, the ones that are really succeeding, Laura Shin just started streaming Unchained, which I thought was really cool. We're starting to move the Overton window on sort of what's acceptable and who can launch a token. I have an M Dudas token. Again, no financial advice, but I just launched it. Frankly, it's like having a domain name. Like I have my token, I have a domain name, MikeDudas.com. Like I just want to make sure those are mine. But what Laura's doing is dabbling, right? So simulcasting, and she still can basically stream in all her other main channels. And so this is fairly low risk and additive, makes no promises to her audience. And, if folks want to go in and sort of speculate, they can. And I think it will age well. But I think it's really early. There's going to be a lot of volatility. So the people who are doing it now, you have to have a pretty high tolerance for kind of like FUD and people talking about and getting in your DMs and saying, when are you streaming and when are you doing this? So we
Yeah.
need to move forward. So I think things will develop. I think what's going to happen is, I'll just give you one example. There's a lot of individual token volatility today. I wouldn't be surprised if you start to see like tokenized ETFs of, certain creator segments, things like that, to perhaps reduce the volatility of individual creator tokens. So I think it's like there will be ETFs of these things, is my macro point, and we need to reduce volatility for this stuff to work.
Mike, maybe taking us zooming out from that a little bit, what do you think? I mean, for a fund to really hit it in a cycle, you need like one big winner. But you guys have had, I think, two big winners this cycle, which is Pump and I think were you guys early investors in Plasma?
Yes, yeah.
Okay.
So invested in their
How
seed.
do you think about like A, how did you find these two and how did you get the conviction? And then B, like, Paul and then like Noah and the team and Alon, like so these are all like pretty young founders. How did you like, what similarities do you see between them? Like what's made Plasma and Pump do so well, would you say?
Yeah, good question. So what's interesting is they were sourced very differently. So uh Pump, so basically everything is sourced. Almost all of our best investments are sourced by folks coming to me. We're not one of those like mega firms like Sequoia that goes out and has scouts and has a bunch of people and scours the earth and literally talks to every, startup on earth. We just don't have that infrastructure, and then kind of like pulls back in and, tries to select down and pick the top couple. What we try to do is put our personalities, our thoughts, and how we support the founders and companies and protocols we invest in out into the world. And then we hope that, basically either directly or via our networks, that kind of brings back folks who are building applications in the area that it's clear that we invest in. So that's what happened with both of these, been very different ways. So there's the direct route. Noah from Pump, basically had seen me tweeting about Bonk and about meme coins. I was one of the few VCs who have embraced them, like helped launch Bonk many years ago at the Solana bottom. So he was impressed with that. He cold DM'd a lot of VCs, but I was one of the few like responded. We grokked it really quickly. All of our partners used it. He didn't have a deck. He didn't have anything. We just launched. Each one of us like launched a token, and we were like, "Oh my god! Like people are buying this." I'm sure on the back end, like Alan was like, "Hey guys, like buy this token, like make the VC excited." But honestly, it worked. It was just sort of magical. Okay, with
So they didn't have a deck or anything. They were just like, here's the vision.
exactly. That's exactly
Yeah.
right. And I asked for one. And so, and I'll get to, you asked like, what's the common theme? The common theme, by the way, with all these founders is they're extremely kind of like certain and confident in their perspective of what the world should look like in the future. And they tend to be doing things that you're just like shocked that, uh, I like if I was in their shoes at the given age, 20, 21, 24, like I just would not have the aura, presence, confidence, and clarity
Yeah.
to do those things. And crypto is out there on the edge where there's frankly in most areas there's just no expert. It hasn't been around long enough. So you're literally creating the knowledge base and expertise as you go. And I think both of these projects, again, Plasma's much earlier in terms of being, it
Yeah.
just went publicly live. But
Mhm.
with Paul, as I mentioned, so we were fortunate enough that a guy named Marius Bennett at Heritage introduced the deal to us. He's a friend and an LP in our fund, and we had actually introduced him to Pump. So basically, we've created this good network of sharing interesting opportunities, and he knew that we were interested in stablecoins. So the good thing is, as Santi was saying earlier, it's one thing to use the chain, but we've actually founded companies, our partners, and we've worked in the industry. So I'd worked at Paxos, my partner Carl had. We know a lot about stablecoins, regulated stablecoins, and the landscape. So anyway, we were introduced to Paul, and we basically begged, scratched, and clawed to persuade him to take a little bit of our money, and he was kind enough to do so. And then the key here is the similarities. As I said, it's just fascinating, and we're going to use these two founders. They kind of like they don't ask us virtually anything on like product or product direction. They're just doing things, and then we'll just selectively say, hey, can you help me with this, or I need this, or what's your quick take on this? We've got our perspective, but and then when I give them an idea, they reject it 4 out of 5 times. Like that's what you like, honestly, it's a pretty good signal.
Yeah.
So that's one commonality I see.
As it relates to like maybe some of the investments that haven't really worked out. And look, you've been around the space for such a long time on the operator investor seat. What are some of the things that you've passed on or made investments on, said, yeah, like that was a big miss for us? And is there like a general archetype framework that you now have adapted based on those learnings?
Yeah. So I would say okay, there's one like big one, which is just, people who talk more about names and, like credibilities and like labels and things like that than about like a passion for the product like that they're working on, like a deep one. So you want somebody who's so deep in the thing that they do. So we're invested in something called football.fun, and the founder, was a so rare whale. He loves the sport of soccer / football. And just that's all he could care about and talked about, on the call. And it was just clear he lived, breathed. And then a second one is putting people around you, not being afraid to put people around you who are better than you at specific things. So I think a lot of founders get bad advice where it's like the founder needs to do everything, and you need to figure out like every single thing. Crypto is just not possible. There's like too many things that you need to be good at for any one individual. So the founders that we've seen be unsuccessful tend to like stay in the like really muck details of everything too long, versus like putting really talented folks around them. Somebody to focus on token economics, somebody to focus on social and community. And then the third is just like failure to ship. Like you have to be default shipping. We've noticed a correlation between sort of complaints about a product, FUD, number of support tickets, and like positive likelihood to succeed. Okay. And by the way, that's true not only of the consumer facing stuff, but also on B2B. It's been really exciting. We have, a portfolio company, Dakota, which is effectively, stablecoin enabled business banking. And so Ryan, the CEO, he came from Coinbase custody. He's he's a very serious person. Like the other two founders I mentioned earlier, he will listen to our ideas, but he has a very clear vision of what he believes should exist in the market and will exist in the market, executes against it relentlessly. And then, basically is not afraid to kind of like really sell features that maybe are 4 to 6 weeks out. I don't mean like publicly market them, but just to tell a customer, I'm going to take you on and we're going to be uncomfortable for a little period of time, and then we're going to wow you. And that keeps happening over and over again. And you sort of ladder up over multiple quarters or years. That's very different than folks who are like, I need to wait until this thing's absolutely perfect to ship. Totally. We have a few of those. And honestly, you miss cycles, you run out of money, the winds change. Crypto moves too fast for that.
Yeah. Ship fast, iterate faster.
Yeah, and you don't get dinged very much in this industry as long as you're continuously improving. People just want you to stick around. They want to hear from you. They want to see the blood, sweat, and tears, the innovation, the creativity, and that you're aligned with them.
Across 30 plus networks and 180 endpoints, Blockdaemon Earn Stack unites staking and DeFi into a single institutional toolkit for crypto rewards. With multi-layered security, full asset control, and 24/7 support, Blockdaemon Earn Stack is built for scale and regulatory clarity. Non-custodial staking and seamless DeFi access, all in one stack. Direct access to DeFi with no intermediate smart contract or vaults. To book a demo, make sure to click the link in the show notes or head over to Blockdaemon Earn Stack to find out more. Thanks to Blockdaemon for making today's episode possible. The machine economy is here. Devices are monetizing data for their users all over the world. Tokenized robots are generating revenue for token holders. The first machine economy free zone is live in the Emirates, and it's all happening on Peaq, the machine economy computer, head to peaq.xyz, that's peaq.xyz, to find out how you can benefit from the age of automation, or click the link in the show notes to find out more. As always, investments in blockchain technology involve risk, terms, and conditions apply.
Yeah. I mean, I can think of countless of successful now top 10 projects that started off very differently and pivoted multiple times, and they're there, and so I guess, like, let's transition a little bit to what everyone wants to talk about, which is you made a pretty bold statement on Twitter. It says, "Hey, listen, we're nowhere near the top, and we got a lot of more room to grow in this cycle." Give us your insight. Like, what led you to think that, and let's
Yeah.
go into that.
So basically, I think that was over last weekend, and hey, we're off to a nice start in Q4 in the week or 5 days since. Bitcoin up 10,000, Solana up like 15% since then. But bottom line is, uh, I was super confused about why I was hearing such disillusionment from so many folks, in the crypto sphere, in my private groups, sort of in public on Twitter, maybe exhaustion from the conference cycle. I think part of it is that people have just been doing like perpetual motion for 18 months on like not important stuff. A lot of people have like trading, like farming, like doing the next meta, but actually like missing the real sort of like quote unquote insiders and public speakers, just actually missing how some of these builders that we've been talking about, how much progress they've been making. It's like that iceberg thing, under the water. Okay. So you've seen an entirely new stablecoin mechanism in Athena, for example, be introduced and grow across multiple ecosystems to, I think, something like 15 to 17 billion in TVL. And it feels like the sky is the limit there, right? So you see that in stablecoins. You see Stripe building out a really momentous stablecoin business. You can see Tether and Circle and other stablecoin issuance increasing dramatically. We're closing, I think, on 300 billion now. You see on-chain DeFi vaults growing at like record pace. Our portfolio company Midas just, I think it's closing in $1.5 billion in TVL, and it was below 100, 6-9 months ago. You see the DATs, taking in more and more capital, on the Bitcoin, Ethereum, and Solana front. I think as you get down the asset list, I get a little more nervous, but positive flows, and the regulatory environment is getting significantly better. We have the Genius Act that was passed, and they're working on a market structure bill. The president himself has like, God knows how many crypto businesses at this point, and is talking about it. Anyway, point is, there was a massive disconnect between the sort of like exhausted, sort of burnt out commentator and the actual like pretty clear empirical market realities. Also, the stock market has been moving up, and people are getting a little, too short term. Be like, why isn't crypto moving alongside it? But again, all of the things I'm talking about, like fundamentals across multiple chains, amount of value on chain, use cases that we've been talking about for a long time, like on-chain yield and DeFi vaults, stable coins. We talked about pump and social. Base has a really cool emerging social ecosystem. Hyperliquid may be building out like the first true, massive, on-chain sex-like performance ecosystem where you have all the financial products of a centralized exchange. It's just been really exciting to see. I just can't imagine feeling bearish. Like the only way that you could feel bearish in that environment is to simply say that the price of crypto assets will simply forever be tethered to, sentiment and traders, a select small group of traders, sentiment and feelings. And I just don't think that's true. I think we have a number of liquid funds. As I said, we have a lot of inflow to the bigger assets from longer term institutional allocators, and it's just pretty clear that the flows we're getting have a longer term horizon than that core trader who's moved and basically created the crypto markets for the last decade.
Mike, do you think that we will still see cycles, and you're just saying we're not at the top of the cycle yet? Or you're like, look, this is just going to be 2004 of the internet on? You didn't really have cycles anymore. You just had like slowly upward growth for 20 years in a row.
Yeah. So I just by virtue of how crypto is, it's gonna my guess is we're gonna look back at some point in time, whether it's the second half of 2026, whether it's 2027, and we're gonna and people who say we don't have cycles anymore, the other folks will say, haha, like you were wrong, look at it. But meaning at some point we'll probably have a pretty big drawdown from a pretty high peak. And so but we're moving so much more money now is what I would say. So meaning like we're at a $4 trillion plus total asset class value. Like I do think we're going to spike up pretty hard here, like over the next
Yeah.
3 to 6 months.
So when do you think about taking some profits, if this is the truth?
Personally or as a fund?
I guess both. Yeah,
So,
both.
it's interesting. And maybe I should just explain the dynamics here, because I think it's important for folks to understand fund or VC obligations. So,
Yeah.
effectively, I'm a venture capitalist. As a firm, people give us money, and then we go invest it into companies, protocols, equity, and tokens. And so, to some extent, we do have an obligation to return capital to the folks who invest in our fund. They're called our LPs, our limited partners. So we will typically, in most VC firms, will typically, sell at kind of like regular intervals and prices over a period of years. And it's different than sort of trying to time the top of a cycle. I mean, obviously, you want higher asset prices that you sell at versus lower, but you're generally looking to return capital to your LPs. It's something that they value. So, looking ahead, let's just say we were gonna, 2x in aggregate from here on the total size of the crypto asset class. We wouldn't be looking to, basically top tick that 0.2x from here. We would be looking on positions that are liquid to sort of like exit in intervals, as we move from here towards that top. That's kind of how I'm
Yeah.
approaching.
Yeah, because I'm basically saying, how do you balance two truths in your head? One is that you love pump and you're very long pump, and the other is that you have LPs who are like, "Hey, Mike, you're up like 100x on this thing. Can we get a little money back?"
Yeah, so it's a great question. You have to have a conversation with so one, you have to understand your LP base. I just kind of explained what they want to see liquidity. But two, you have to talk with the founders and understand what they're optimizing for. And too many, and I think there's been a movement towards investors who do communicate with with the founders they invest in about their plans on kind of like distributing some of the assets if it's tokens, versus raising from like historically like funds that would dump like the minute every unlock occurred. So we're not that type
Yeah.
of fund and haven't been for more than 4 years. We hold from our first fund, the vast majority of the tokens that we invested in 2021, and many of them are liquid. Okay.
Yeah.
We've done distributions. The the but the reality is, to your point, if you're up, 250x on something like,
Are you up 250x on pump?
so maybe. So the the point is that you're going to get sued if if those tokens were
Yeah.
liquid and like you
Yeah.
don't try, like, and they're not. Okay, so it's like this is a hype. This is a total theoretical. But like, it'd be pretty hard to justify to somebody that you don't realize some value on that at some point.
Yeah.
But again, we believe long term. And like I would imagine the pump guys who are really smart would say anytime you sell, you're going sort of you're net short us because you're not as exposed as you were. And it's just a balance
But
of explaining our business
like,
model.
Mike, let me make it easy for you because I think, like, I face this issue too. Like, you have a fiduciary responsibility to maximize returns for your investors, Y- in the same way that, and that's it. Like, you just need to have a very honest conversation. Like, it is
Yep.
unrealistic to assume you're going to hold this thing forever. You are not a perpetual, like, permanent capital vehicle, right? You have a life to your fund, and I think, thinking out loud here, though, I mean, like, look, if you have like a couple of funds, say you're raising a new fund, private equity and venture, they get into trouble sometimes because they are now like contributing a portfolio company in one fund that hasn't DPI'd and is 10 years in and hasn't returned capital, and so they contribute that to the next fund. So you're basically selling a portfolio company from fund 1 to fund 2, and it's not looked upon nicely. Is there a version of this world with tokens being liquid where you could say, hey, listen, we're going to sell into the open market or OTC this in a graceful way, exit as gracefully as possible, and we'll do that. And then look, we have fund 2 that's maybe liquid and has a discretion to buy liquid tokens. So we might buy that. Like, is that something that computes? Is it possible? Is there a conflict of interest? Like, just kind of curious if that's something you guys have thought through.
Yeah. So we don't specialize in that. There are funds that do a version of that where they have venture funds and hedge funds. Candidly, I think an easier way to do so there's a middle road, which is actually distributing in kind. So distributing the token asset to your LPs as opposed to selling and distributing cash. And so some of the best investors in crypto who have really outsized positions relative to their fund size have historically distributed in kind. And so basically you crystallize the value, you send the tokens to your LPs, and then they can make an individual decision on whether to sell themselves and incur tax bill.
Yeah. And by the way, fairly common in venture too. I think like for some funds like Benchmark, like they distributed Uber stock, which is huge win for them. It's like, guys, do what you will with that. And I think, yeah, that makes sense.
Yep.
Yeah.
Mike, is there so what are the areas right now that you guys are still deploying into? Because you've got, and maybe one area that I'd be curious about and how you guys have played it or invested in is prediction markets. Because it seems like you guys kind of have perps covered and meme coins covered and stable coins covered, but like I don't really know how you guys have thought about the prediction market space.
Yep. So we have made one prediction markets investment this year. And what's interesting, so if you just look, so we do believe, like many other people do, that prediction markets will be a very large sector over time. Look, calling them prediction markets is somewhat of a nice way of just expanding on what they really are, which is like they're not that different from effectively betting, right? And we're just now like betting on more things. Maybe we're betting on events versus betting on sports, but that clearly is a business model that works. And because of crypto and maybe regulatory arbitrage, you can do things in offshore structures to now create new and interesting markets. So we think that's interesting and going to become very large. The existing market is pretty dominated by Kalshi and Poly market. I think Robinhood's now getting in the market. There's going to be big players here. So our general belief is that you're going to have to go sort of out on the risk spectrum somewhat if you're investing in new businesses today in the quote unquote prediction market space. So, we've invested, lent around into one, we haven't announced yet, but they're doing two things. One is basically is it AI or individual, like I can create a market. Okay. And there are a few public entities doing this now, ones that are already out there, like Myriad Markets, where like you can create your own markets. And then they're adding in leverage as well, which is really complex, really hard to make work. But if it does, you go from kind of like that binary outcome where, it's hard to really get like really significant multiples and reasonable things to, if I believe in something, I can sort of add in leverage. So that's one area. We're looking at one other prediction markets deal right now. So yes, like we're investing there. We think it's interesting. The one we're looking at now is very focused on like short dated financial markets, right? So like 0-day options and shorter. And so bullish. And we recently did a investment into Bulk, which is launching in November, bulk.trade. It's a perps DEX and Solana. I just fundamentally believe
Solana responds to hyperliquid.
Yeah. There's a bunch of like, Drift exists and Bullet, but like, it just makes sense that Solana, like I'm as bullish as I've ever been on it, and it's going to grow. And there's a bunch of great applications and there's more every day. And it's the most used blockchain. Like if there's a really good perps DEX there, people are going to use it. They just haven't had a really highly performant one with thick liquidity, great performance, etc. That should, I believe, happen over the next 6 months. And it's much better to have, all of your different activities in one place versus having a bridge to,
Yeah.
4 different chains to do this. So
Well, can we double click on that investment? Because we talked about this in the last pod, but what did Solana get wrong or didn't do? And Hyperliquid stepped in because like Hyperliquid has been all the talk this cycle. Why haven't, and maybe you can pick on specific projects or reasons why at the infrastructure layer or at the individual project layer, like something like Drift, just hasn't really taken off because it makes all the sense in the world in a venue like Solana. I'm just kind of curious, what has Solana not gotten, and what is uniquely enabled by this new project that you invested in?
yeah. So first of all, I think culturally, Solana DeFi has had, I believe, like a hangover from, Sam Coins and FTX and, it was the Macalino brothers who had like 9 projects. There was a lot of short-termism in Solana DeFi in that 2021-22 era that made it so that I don't even think Solana had a chance in 2023-24 when Jeff was building Hyperliquid. Like like even if an entrepreneur of that caliber had built something similar in Solana, it probably would have been difficult to bring in the traders, many of whom had just gotten wrecked on FTX and had like their, you know what I mean? It just had that association. So culturally,
Mm.
it wasn't the right time. And so I wouldn't say like Solana got it wrong, and then, the existing products were trying to do a lot like right on the L1. And I'm not a big perps trader, so I'm not the perfect person. My partner, Carl, knows the market, and our liquid investor, Bobby, know the market and the products significantly better than I do, and led that deal. But what I will say is everything I've heard from folks is that the existing perps products on Solana historically were pretty bad, and not necessarily all of their own volition. They were trying to do things in the L1 that you simply like couldn't do in a clean way. And so people would get like tons of slippage on their positions. They get liquidated when they maybe didn't think they should. Like you would just do wonky things when you tried to enter and exit positions. And so bulk is taking a new architecture where a lot of sort of like the matching, a lot of things are happening uh, not directly on the L1, but the assets always remain there. Okay. So the value always remain there. And then a lot of the matching and logic happens not on an L2 or an extension or anything like that, but they actually have an environment uh, basically that is tied to Solana validators. So it is distributed and decentralized that allows them to achieve higher performance on some of the
Mhm.
really, really complex things that they need to do. But
Yeah.
again, the assets always sit in the L1. You don't need to bridge them like you do in other architectures, and they're not constrained by the latency of the L1.
Yeah.
If you have my partner Carl on, he can explain it a little better. But the point is, I think culturally, it's the right time. There's
Mhm.
significant activity on chain, and people are now exploring architectures that it would have been difficult to get through 18 months ago. And so it's pretty clear, like there are perps traded on numerous venues that are centralized. It's pretty
Mhm.
clear now there are multiple on-chain venues with Lighter
Mhm.
and Aster. There's there's gonna be one that's gonna be large on Solana, at least one. So but it's still a venture bet, right? Like there's a lot
Totally.
of companies going after protocols going
Mhm.
after the prize here.
Yeah. I know we want to go to something else, but before we go there, what is just double clicking on the Solana DeFi ecosystem? Look, you just said that you've been as bullish as ever on Solana. I think the bullishness in the timeline has subsided a bit, and I think price action has sort of been muted, and you kind of see this, and it's normal. Um, Curious, is there still an overhang? Are you seeing more and more teams? Like, there's the Alliance DAO report, there's the Electric Capital report that talks about developer ecosystems and interests of teams. From your vantage point, are you observing something different? Are teams still very excited to go build on Solana, or are there other ecosystems that you think have just gained more market share, as of late?
Yeah. So this gets to my point of the timeline not really being representative of what's kind of happening under the water, like the iceberg under the water part. So the prediction market protocol we invested in is building on Solana, Bulk's building on Solana. We've looked at a lot of other exciting teams. Um, So there's plenty of interesting stuff. Like stablecoin issuance in Solana is increasing dramatically, just a couple billion in the last month or two. Um, Camino is like breaking out. There are a bunch of other protocols. Drift is seeing significantly higher open interest. So there are things happening in DeFi on chain. Jupiter has a bunch of exciting products that are growing rapidly. So there's a lot happening, even while meme coin volume and trading volume is down. There's other things. The share
Yeah.
of non-meme coin volume on Solana has increased significantly over the last couple of months. But it's just not the biggest story right now, right? The biggest stories are CZ fighting Hyperliquid, and that's fine because it's not stopping other, like the actual folks building, from their roadmaps. And what you're going to see is, again, Solana, the token's doing well because like there are so many interesting folks building to improve from the base layer, all the way up to the application layer. So, but it's not going to be the only ecosystem. So we're never the first, by the way, into a new ecosystem. We weren't the first into Solana. We weren't seed investors. We came in when the app layer started to develop. Hyperliquid, we've started to invest now. Like, we bought some hype, and we're looking at private companies on that.
Like, is Hyperliquid the second most active ecosystem from the app layer that you want to invest in right now?
I would say yes. It's up there with Base is also, in
Base and
the
Hyperliquid?
conversation. Yeah. So those are kind of the three that we're looking at the most: Solana, Hyperliquid.
Across 30 plus networks and 180 endpoints, Blockdaemon Earnstack unites staking and DeFi into a single institutional toolkit for crypto rewards. With multi-layered security, full asset control, and 24/7 support, Blockdaemon Earnstack is built for scale and regulatory clarity. Non-custodial staking and seamless DeFi access, all in one stack. Direct access to DeFi with no intermediate smart contract or vaults. To book a demo, make sure to click the link in the show notes or head over to Blockdaemon Earnstack to find out more. Thanks to Blockdaemon for making today's episode possible. The machine economy is here. Devices are monetizing data for their users all over the world. Tokenized robots are generating revenue for token holders. The first machine economy free zone is live in the Emirates, and it's all happening on Peaq, the machine economy computer. Head to peaq.xyz, that's peaq.xyz, to find out how you can benefit from the age of automation, or click the link in the show notes to find out more. As always, investments in blockchain technology involve risk, terms, and conditions apply. Maybe we can shift gears a little bit, Mike. You had this tweet, you said that it seems we may be moving into more of a quote unquote company meta in crypto, where TGEs look more like IPOs instead of a 25 to 50% team and investor allocation, i.e. insiders, plus a 50 to 75% network allocation. You're seeing 80% plus to insiders with a small new investor float, just like IPOs. Can you talk through that in a little more detail?
Yeah. So I've noticed, and people have commented on this, not just me. So I won't talk about any specific project, but there have been a couple really high profile token launches recently where, I remember when like Trump coin launched, and that was a meme coin, and people joked about like 90% to the team, right? But it was always kind of like, there's always sort of the de facto structure that if you launched like a real coin, and I'm using that with air quotes, if you launch a real coin, well, hey, there's no reason to launch a coin unless like you're giving some to the community, and there's going to be like participation and governance and ownership and things of that nature. And you do that through a mixture of airdrops or long-term incentives and community allocations. So so we were seeing that with most token launches until I would say like maybe midpoint of this year. And the biggest shift that I've seen in the last couple months is an increase in the number of launches where there's basically no community bucket, no airdrop, and or the airdrop is on a percentage basis pretty low. It seems big because there's a lot of shenanigans going on around ensuring that like the launch FTV of the network is really, really high. And so we've seen, a decent number of those. But what it's starting to look like is more a creep up in tokens being allocated to insiders. So, team through various different buckets, and then, investors. But candidly, I haven't even seen the investor bucket tick up that much. It kind of held constant. So it just seems like teams are finding more creative ways. And
Is this is this a commentary on the market, or is it a commentary that this is a
I
good or
think
bad development?
it's, uh, we'll see. I think that, the reason I was I like to pump sold tokens in the market, right? Sold like 30% of the supply to people, right? I thought so that there's actual distribution of that token amongst people who want it versus just insiders. I don't think it's a positive development in balance. My guess is it does not end well in the future. The the interesting thing is it makes things look more like securities. Okay. So it's like, it's not a decentralized network if, you know, only 10% or 5% of the float is going to be in like external people participating in the network. And if there's just not like a really clear way to give them substantial ownership of the network, and I think you start to see folks getting like no action letters from the SEC before they launch their tokens. You don't need to do that unless you have some fear that your token's a security. So I don't know. I think it's something I'm going to keep a really close eye on.
Did you guys follow Flying Tulip, Andre's thing?
We did. We
Yeah,
did.
I
We
did.
took one pitch call. I think it's really interesting. It's outside of our mandate just from a valuation perspective, but it is interesting. And
So
it helps to align, folks who are putting in capital with everybody else in the network.
yeah, maybe I'll shed a little bit of context on this for people who saw Andre, who started both Phantom and Sonic, I think.
And Urine, by the way.
Oh, and Urine, and obviously Urine, yeah, of course.
And Winesure, and
Yeah,
You had like
yeah.
9 projects so
yeah,
far,
like
right?
9 projects. Yeah.
Yeah. So anyways, there's a big announcement. Flying Tulip is Andre's new thing, and he raised a quote unquote $200 million seed round. And the reason I put quotes on that is I think people maybe didn't read the fine text, or maybe people just didn't understand what this raise actually was. So basically what the way that they raised this I thought was pretty interesting, where investors contribute stablecoins, or I think stablecoins are ETH, and the capital goes into a protocol treasury, and there's no lockups, no team allocation, nothing like that. Every token that's issued to an investor is actually fully backed by the collateral that the investor contributes. But the twist is that every Flying Tulip token, and it's funny to just, the name is a funny name, so good on Andre, but every token comes with a perpetual put. So what this means is you can actually, if you're an investor, and Dudas, correct me if I'm wrong here, but I think you can return your tokens and get your original capital back at any point in time, right? No expiration, nothing like that. And if you exercise the put, your tokens actually get burned, which means the supply shrinks. And no one else has to do anything. You can do this at any point in time if you're an investor. Um, the catch is that if you're an investor, you're actually giving up, what you're giving up as an investor is the ability to, basically the opportunity cost of that capital. It's the ability to, if Dudas put in $1 million into Flying Tulip, he's not earning anything on that $1 million, right? It's treated kind of like an investment. Whereas if he was farming that in DeFi, maybe he could get 15%. So really the investment is the opportunity cost of your capital. It's not the principal. So it makes it's not really a $200 million fundraise. It's 200 million got contributed into the protocol treasury of Flying Tulip. And then the team doesn't actually get to touch those tokens, is the way I understand it. Their upside to run the business only comes as a share of the protocol revenue, which are the fees that the 200 million is spitting off. So I don't know, A, Mike, hopefully I did that justice, but B, I'm just curious what you think of this. Like, this is very interesting fundraising mechanism.
Yeah. So we we took a quick meeting, and I've only sort of read the headlines.
Yeah.
But that to me is a more sort of honest and open way to raise capital than many of the things, that I've seen I like that that the investors have to sort of put money in at a full value in a protocol they believe in. And then, kind of leave that capital at risk in the protocol, earning yield to then encourage people to come and build financial products on top of this to make it successful. It's different. It's very different than putting a de minimis amount of capital in by insiders, like a very de minimis amount, and then, kind of
Yeah.
like market making to really high FDV, right? And then kind of trying to have retail come in and buy and sort of fund your exit in that way. This is different.
When you think about the dynamic of like you see a kind of a hybrid here where Plasma kind of encourage people to and in fairness, like Blast kind of did this as well, which is like you open up a vault where you get TVL, and that in Plasma's case was a ticket to have an allocation. And is that an interesting mechanism to you guys? Would you actually think that more projects are going to explore the Andre route, or is the way Plasma's done it maybe more of a good in between? Because of course raised from traditional investors, and then they opened up. They did the Echo raise, which was very like ground level for community. Kobe kind of led that one, and those people are been getting exposure from the early days. What would be like? What are you advising teams to do? Like, is it subject to the type of project that they are, or is there a preferred mechanism where you think it's actually going to be the default going forward?
Yeah, so it's so situation specific, I think. But look, I think the most common raise path that you'll see will be the something closer to what Plasma did in the future, and frankly what Pump did. So a mixture of private investment from VCs, angels, and others, but not over raising, because it's becoming clear now that if you're successful, you don't need that much capital right out of the gate to prove validate. Followed by these public raises, whether it's like Echo Legion or direct in the case of what Pump did, or on exchange. Um, and then I think what's more important than how the money's raised is what the purpose of the token is. You know what I mean? Like the so with Pump, and with Hype, like extremely different paths to get live. Hyperliquid never raised any money, but the most important thing is like, what does the token do and how does it accrue value once it gets out into the market? And that's where I think you're going to see standardization around value accrual and revenue generation to the token. Again, whether it's eventually, you're able to distribute revenue in the form of like fees directly to token holders, which would look, that would be like a security today. Today, you kind of get around that by doing buybacks, so making the token deflationary.
Mhm.
Um, but again, the only thing I'm certain of, these mechanisms are going to shift, and we'll see. And I'm not 100% sure what's going to work, but you better have a token that
Yeah.
has value in your protocol moving forward. And you see that, like the reason
Mhm.
Solana is like outperformed since the bottom is because there's been so much revenue on like rev on the network and so much
Yeah.
usage. So, just outperformed as an L1. And the thing that I would be confident of, you're going to have the old school, meme coins, Litecoin, Cardano, et cetera, like Ripple, who knows what's going to happen with those. But I don't think you're going to have successful meme coins from like the 2022 era on. So
Mhm.
meaning, if chains like Aptos and Sui and Story and others don't actually get usage, I don't think in 5 years they're going to be valued where they are today.
Mhm.
They will
Yeah,
go down.
totally. Mike, elephant in the room, beyond Pump, the most successful theme has been prediction markets on the consumer side. Those two projects do not have a token. Maybe they won't ever have a token. That doesn't mean you can't distribute in earnings and or allow active participants to participate in the upside of the protocol. There are different other mechanisms. Like, would you push back to that? Like, do we need tokens for every project? Because that's been the flavor du jour since the early days, right? Since the ICO, it's like let's just have a token. Eventually, we'll have a token. Uniswap kind of got forced its hand by Sushi Swap with a vampire attack. Maybe there was a version of this world where they wouldn't have ever launched a token, and there's potentially investors that resisted that. Different environment, different regulatory environment. What do you is there? Do you think that there's a version here where like Kalshi, Polymarket don't ever have a token, and look, they've been successful in their own right, or do you think look, everything will have a token at some point, and it's just how you structure it?
Almost everything will have a token is my general guess, because you just generally have an incentive to issue one at some point. And again, I think it's becoming less and less like Base is issuing a token after sort of for a while seeming like they wouldn't and they didn't need it. But it's effectively it's just the market is rewarding tokens even on top of equity value. It's just so far it's been additive. You're not sort of getting dinged. Um, so I would expect so there's definitely going to be things on chain that don't have tokens, like many like sort of stablecoin products. You'll probably have a lot of DeFi products in the future that maybe it's just a pure borrow lend. Like there's no need for a token, but and there's just pure fees on chain that go to investors. So I do think that that type of thing will happen, but most crypto native projects that are truly on chain will have tokens. They're useful in so many ways, and they're just so much more flexible than pure, call it equity ownership, in terms of who they can include, in terms of how value can be distributed to stakeholders.
Wouldn't be a Dudas podcast if we didn't cover NFTs. Any updated views there? Do you actually think that they'll recover?
Dudas is over here pumping.
Yeah, so Moonbirds announced their token. It's coming today.
Why do you love Moonbird so much, Dudas?
So NFTs are emotional; they're not rational. So basically, like every human, like we have, I like I like joy. Like I like to have fun. You know what I mean?
Oh,
like
do you?
you're
not supposed, sir. You're not supposed to. I'm sorry.
Yeah, so I'm not like
you're gonna get canceled by that.
Exactly. And fun for me means expressing, things and like allegiances and I do like to be parts of like fun tribes. So anyway, so NFTs are what got me excited about doing things on chain other than just pure money, like NBA Top Shot was what got me into. So point is, Moonbirds, it was almost symbolic for me. It was the NFT project that I got most wrecked on in 2022. I think I bought one for 43 ETH and I later sold it for like 1 ETH. For tax write-off. The project founder, Kevin Rose, like basically abandoned the project by, rescue selling it to Yuga. And, just a lot of like, he walked away with a ton of money and a lot of sort of like broken promises in the roadmap. And it was just awesome. It was very similar to how Pudgy Penguins was sort of rescued by Luca in 2022. In 2024, I believe, maybe early 25, Spencer sort of rescued Moonbirds, and I was watching it and observing it. 1KX had invested in Pudgy, they invested in Moonbirds. I said, heck, like let's run it back. Like this is I like the art then, I like it now. It's silly. Spencer's cool. So yeah, one day I just bought like, I don't know.
Don't overthink it, right? Yeah, Spencer's cool. 1KX investment.
Let's go. And so exactly, often the best investments are the simplest, and I'm having fun now. So like it's a good group. I've gotten to know Spencer a little bit, and he is cool. I'm not, like I'm like a boomer. He's like, building out all kinds of cool merch and IP, and he's traveling all over the world, all over Asia, is spreading the gospel. I'm having fun observing it, paying attention. I don't know like what's coming next in the roadmap. He's created the TCG game for Penguins. Maybe he'll do it for Moonbirds. Like, I don't know, but it's fun. And it pairs nicely and gives some personality to my on-chain behavior, next to the DeFi stuff and holding Bitcoin and Solana and the other big assets hype.
One last question for me, and I know we're up in the hour. Distribution, in my opinion, is the name of the game. Being a consumer, I know, putting aside like your role in Six Man, that you're investing in your mandate, what about companies that have in the traditional world, you haven't invested as much in stablecoin issuers, I believe. Like, I feel like that's a very tough segment of the market. Like, you are just going to be squeezed on both ends, rates cuts and just traditional financial institutions, launching their own, like Bridge, just enable that and like probably killed 3 businesses with one whoop. How do you think about like companies like Robinhoods of the world, more of those companies entering the space, using this technology and just crushing kind of like startups that are trying to like do the Web 2 analog for crypto? Is that something that you've started to think more about? Like just, hey, maybe we shouldn't be investing in something that like JP Morgan can come in and crush you. And I guess the joke might be, how many startups in Web 2 and software, it's always like, what if Google gets into the space? And they never do. Like, there's companies that just build around that and are successful. But yeah.
So we tend to, as a firm, now there are, even crypto native investment, VCs who invest primarily in equity, and, companies that look more like, on-chain fintechs. For the most part, uh, it's not an area that we do a lot of investment in. Okay. So, meaning we like, protocols that have tokens. We like things that, should be on chain. We specialize and really can help a lot around, token design, dynamics, marketing, getting folks excited, how it works in your protocol, etc. Um, so generally, we've not done a lot of investments that look like more like fintech than crypto. And we have fintech backgrounds on our team. Like I worked at Google Wallet, Google Pay, Braintree, Venmo, PayPal, Paxos. My partners worked at Paxos, PayPal. So Google Wallet. We have a lot of experience. It's just honestly, I don't find it as fun, and it's more of like, let's run a very predictable spreadsheet on what is going to improve the legacy thing by 2x. And I'm much more excited about like what new business model doesn't exist today, that's going to be worth billions in 5 years. So we're looking for more of those examples that may not seem sexy, but I think are exciting like that are like on-chain DeFi that's composable, where you can use all different kinds of asset classes as collateral, on-chain stocks, and stable coins that are yield bearing, and your soul tokens, and this, that, and the other thing, and you can cross margin them to borrow, to do invest in perps, or you can borrow against them. Like, I like DeFi because it's composable, and I'd rather invest in that than in like stable coin orchestration, even though it's super valuable to the world. And I think you can make money in it, but the edge there is decreasing really rapidly. To your point, as legacy companies come in, as Stripe moves in, I'm surprised Adyen hasn't. And as the big fintech VCs invest and squeeze out crypto native VCs.
Mike, this has been a great conversation. I think we're going to have you on to discuss more of these new primitives that, you're unlocking friction in financial services and flows, and that's going to unlock so much like exponential consumer behavior in maybe not so much in the US, but in other parts. So there's just so much that we can continue the conversation, ex-US opportunities and whatnot. So this has been a real treat, man. I don't know if there's anything else you want to cover.
Yeah, content of the week, baby. Mike,
Oh,
we
right.
always do content of the week. We will not put you on the spot. We'll let Santi and I can go first. Santi, any content of the week?
Oh, no, you're going first.
All right. Bill Ackman conversation at the Citadel. The Citadel is a military college. Ackman went and spoke, and it was actually a pretty good conversation on just like failure and his investment philosophy, why they just took a massive long on Hertz rental car, which I thought was interesting, hearing his logic. And yeah, just, I don't know. Sometimes I feel that Bill Ackman, when he talks, is just like fully shilling his own bags. And sometimes I actually find that he's both shilling his bags and has a nice philosophical take on life and investing. And this was the latter. So
I
good
really
talk.
like
It's
Bill.
on
Bill's
YouTube.
an LP
Yeah.
in 6-Man Ventures. So
Oh, nice.
his
Nice.
bags are our bags. Let's do it.
His bags are our bags. Yeah.
Oh,
Well,
yeah.
he didn't give 6-Man the shill, but maybe next time. Yeah. Santi, what do you got?
Yeah, content for me, you know how much I love Founders Podcast. There's one most recently came out with the founder of Spotify, Daniel Ek.
He's got a new show. It's not
He's
Founders
got a
Podcast,
new
right?
show where he's actually
I've
interviewing
got that
them.
saved. Yeah, I heard it's an amazing
Dude, it's
conversation.
an hour, almost 2 hour long conversation. Daniel says something that's incredibly that resonates with me. He says he optimizes for impact, not happiness, and I think happiness is a derivative of impact, and it's very much in line with I think everything that. So great conversation. I'm really excited to see where David takes that format, because I think it's this one was his first one. It was very, very good.
Yeah.
So I'll just give one quickly. So I listened to Invest with the Best, and Dylan Patel was on this week talking about the $1 trillion AI build out. Just a fantastic listen for somebody like me who's not deep in reading. I'm not even an engineer, but I'm not reading like scientific AI papers. Really good overview that can catch you up to speed.
Yeah, I thought Dylan had great overviews on, if you're like if you want almost a hot take on like Meta, Google, XAI, Anthropic, OpenAI, it's a very good listen.
Yeah, and then you follow
Okay.
it, and I'm like on ChatGPT searching 15 things that he talked about.
What does this mean? Yeah.
All right. I'm gonna have to cheat. Dudas, you mentioned Invest Like the Best. There is Colossus, which is I think is his kind of magazine. Dude, amazing, amazing. 2 articles that I read over the weekend. One was this story of the founder of Interactive Brokers. If you love DeFi, go read that. It is a phenomenal
My fellow
profile.
Hungarian. Let's go.
Yeah, fellow Hungarian. And then there's another one, Jerry Newman is a retired VC. He has a take on a value accrual for AI. It's so top of mind. Both of them will inspire. If you like crypto, these are topics that
Where's the Jerry Newman one? Was it in Colossus too?
it was in Colossus. Yeah, I was subscribed to his blog.
Colossus is so good. Colossus
amazing.
is like a good example of just put out world-class content, and it'll bubble to the top.
They don't ship to ex-US, UK, but I want to subscribe because I want to get the magazine. Like it's there in print. So
Yeah.
pretty amazing stuff. So those 2 articles were amazing. Really thought provoking.
Dudas, thanks for coming on, man. Good to see you. Congrats on just a hell of a last year or 2 of investing, and good to see you're still having fun.
Awesome. Appreciate it, guys. Thanks so much.
Thanks, dude.